Hi, my name is Michael Waits. Thank you for joining us for this very special edition of Insurance for the New Possible. We are broadcasting live from the Chubb Insurance booth at the Singapore Fintech Festival, the largest fintech festival in the world and a knowledge platform for the global fintech community. We could not be more excited to be here. Now let's welcome Walter to Oude, a founder of Chocolate Finance and Sing Life, with whom we will discuss how embedded finance makes your money work harder. Amazing here.
It is, isn't it?
It feels like there are 60,000 people here, doesn't it?
I think there really are 60,000
I think there might be, right? That's what it feels like. I want to ask you a quick question beforehand, before we get going. Why chocolate?
Well, chocolate. Everybody loves chocolate.
Yeah.
Chocolate makes you happy.
It does.
And we want you to be happy about your money.
That's exactly what I thought. Go ahead.
That's all it is, right? So chocolate is designed to really give people a better return on their spare cash, give them access to it whenever they need to, and just make money work a little harder.
You know, I want to talk a little bit about customer engagement because I think it's really important, but I want to understand from your perspective what that really means. Like, what do you mean when you talk about customer engagement, and why is it so important for you?
Well, we're all human beings and individuals in our own way. We all like what we like. We all don't like what we don't like. And in customer engagement, it's always the key to try and figure out how do you get to the customer on the things that they like and the things that they need, and provide solutions that are specific to what they're looking for.
So can I ask you this though? How do you personalize it, or can you personalize it? And is there, I have to ask this, right? Is there an artificial intelligence aspect to this? Do you think about that at all? Because I like white chocolate, and sometimes I like it with almonds, right? But you may not.
I think it's much more fundamental than that. I think human beings have got a fundamental need to make their finances work better.
Yeah.
We've all got money in a bank account. Most of us are not earning particularly good interest on it. And we're all looking at it and saying, I wish it could do a bit more. I wish I was optimizing it. And so we can kind of blend that underlying fundamental customer need around cash and cash enhancement with a fun, engaging proposition, which is simple, easy to execute, straightforward, and in your pocket and instant. Then I think you've got a really strong recipe for success.
Talk to me about the fun part.
The fun part?
Yeah.
Well, fun is everything,
besides earning the money, but talk to me about the fun part.
Well, in the old days, your financial services were really
stodgy,
boring, right? So
I did it for 20 years. It almost destroyed my soul, but go ahead.
Exactly. Most financial brands are something bank, and most of them are not really exciting brands.
Not really.
Most bank names are just names that have been there for a million years. So how do you kind of take the fundamentals of what financial services is designed to do, which is enhanced returns and better wealth management and all those things, and present it in a way which people say, hey, that's cool. Hey, I like to be part of that. Let me whip out this thing which I like talking about, and it's just cool. And I'd rather be putting my money in a cool place that's actually doing a good job for me than just following the old norms.
One of the things you did when you were at Sing Life was you introduced this account, right, where people had their excess cash and they earned a fixed return. And you're kind of doing the same thing now. Why is that particular thing so important to you? Well,
when I was at Sing Life, we took a view that the best way to engage with a customer is in his cash. The holy grail for insurance companies is customer engagement. How do you talk to your customers more regularly? How do you get where they're at?
Right.
And the truth was that customers are at where their money's at. And if you can get closer to their money, you have a much better opportunity to engage for further financial services. So what we did was we said, why should it be that the domain for cash is only in the certain segments of the financial services ecosystem? Why is it that only banks can help you with your cash?
Right.
So we built a product at Sing Life. We called it the Sing Life account. It was an insurance contract. You could put money in any time, take money out any time. We gave you a crediting rate on top of that. We put a debit card on it so that you could spend it in instant access. And we can give you a better returns because an insurance company is not restricted by the same asset management structures that traditional cash management solutions are ascribed to.
Yeah.
But more importantly than that, that engagement with customers around their cash led to further conversations. How can we then embed further financial access into wealth stories or health stories or general insurance stories, all led by this engagement that customers have with their cash and cash accounts? Yeah.
So health stories and wealth stories. And can you talk to me, can you feed that back into this engagement thing? I I just want to say this. I really appreciate this idea of engagement, and I'll tell you why. I think it was you who said to me quite a while ago that banks actually interact with their customers every single day. Whether you're going to an ATM, depositing money in the bank account, checking your account, buying things, seeing if you still have enough cash. But insurance companies traditionally have engaged with their customers once a quarter, once a half a year, once a year. Was that part of the idea too, is to just get them more interacting with that account so that then you can do that thing?
Totally. Most insurance companies engage with their customers in bad circumstances.
So when they're vulnerable.
Please pay your premium, or I'll talk to you when you have a claim, or
fair enough.
Is something to that extent. So if you can get to a happier way of engaging, rather than just send you a nice email on your birthday, if you can engage in a better way, you can talk to them more regularly and sell them more stuff.
So I never had a Sing Life account because I didn't live in Singapore.
Sorry about that.
No, it's my fault. But I'm curious about this because I think about this engagement too. You see what I do. I think it's super important to be in conversations with people. I think it's the only way to keep them engaged, or the best way. Was there a way to then tell people, you've just deposited this, your balance is now this, like on an active basis, send them an SMS or a message and just say, and your interest for this month was this, you are this close to your next goal, you may be able to afford that house or that car or that boat that you wanted, kind of thing?
Totally. Everything is instant, right? So if you have if you had a Sing Life account, or if you're lucky enough to have a chocolate account, then you get your money is all instant. So it's instantly reflected when it comes in, it instantly comes out when you need it.
Right.
It's a new way to think about cash management, which is using the existing regulatory regime to optimize the way people can enhance their cash returns.
I love it. So you use the word embedded kind of in passing, but I don't think we can't talk about it. I don't know if that sentence made sense, but we have to talk about it. Talk to me about embedded finance and some contextual examples.
So in the chocolate example, our job is through financial advisors to give access to a cash-like account, which is generating better returns. That relationship with the financial advisor then gives you access to advice when you need it, so that you can expand out on your broader wealth opportunities.
Right.
But through the app, and because you get this constant engagement with the customer, there's an ability to bring those customers into embedded opportunities, whether they be in wealth management or insurance or whatever else, because they're coming to look after their cash. And that cash is useful in broader financial services. So the embeddedness of these other opportunities in the cash relationship is where you want to be.
Do you ever think about what we call like a phygital experience? Do you know what I mean? Like combining that physical experience with a digital experience as well, so that people can have face-to-face interactions as well as sort of that digitally transformative interaction as well?
Yeah, I think the world, post-COVID, the need for physical is diluted. I mean, banks are closing branches because nobody really goes into them very much anymore.
Right.
You can do pretty much anything you want to do on your banking app, or otherwise money is fungible and can move anywhere. So that digital, that physical aspect is not really a thing that's going to be meaningful to customers. That said, when somebody wants to actually physically talk to someone, there's a phone call, there's a video, there's a WhatsApp, there's a digital way to a physical engagement.
Which is fair, right? Which is fair. We were having a conversation earlier where 60% of people want to have a specific product, but only 40% of them want to have it digitally. And do you find that some of that stuff is different in Asia than it is in the Western world?
I don't think so. I think
That's
everybody
Go ahead.
is fundamentally attuned to instant everything, right?
Instant
Which means
everything.
you don't want to go and physically talk or move out of home. Everything needs to be right here, right now, in front of you, on your app. You like something, you buy it, and you want it now. And the same thing applies to stuff you buy on Amazon and stuff you buy in the financial services industry.
Fair enough. Talk to me about exactly how embedded finance makes your money work harder.
Well, the first thing
I love the fact that you say this. Go ahead.
The first thing is to get your money in one place where it's actually working in a good way. And we use an asset management license as Chocolate to deliver. Your money goes into an account which is actually backed by fixed income securities to deliver you the higher returns that you want.
So you take that money into an account and then you have what, like a short-term money market fund?
It's a bit longer than that because consumer behavior is actually a bit longer term and stickier.
Okay.
Think about it. If you have two accounts, one's got low interest and one's got high interest, which money do you spend first? You spend the low interest one first, right?
Sure,
so the higher the interest is, the more sticky the money is. And the more sticky the money is, the more aggressively you can invest it for the customer's benefit. But because the money is there and visible and tangible and instant, you're checking on it all the time, which gives you the ability to embed other more wholesome, holistic propositions around that. So whether that will be insurance enhancements or further investing enhancements or rewards or spending, if you can get where the customer is and embed your product and services where they are,
yeah,
you're in a good place.
So I don't know if you know this, but I used to trade U.S. government bonds. So this may be a slightly esoteric, but like the settlement time for trading a government bond was T+2 or T+3. I can't remember. It was a while ago. How do you give people the ability to come into their cash, come out of their cash, and still manage those returns that are really important to you, but also really important to your clients as well from an embedded finance perspective?
Well, money in and money out instantly is the critical key to managing cash successfully.
Really is.
So there's some technological mechanisms behind that makes it all work.
Yeah.
But it's basically just getting access to a set of underlying fixed income investment grade corporate debt, which is 2 to 3 years in duration, which makes for that enhanced return and ease of access.
Does it surprise people? Because I can easily understand this conversation, right? But if you go mass market and get people to do this embedded thing, have access to their cash, and talk about the difference between like corporate bonds and government bonds, is there an educational process that you have to go through too with your wealth management people, but also with their clients to tell them why you can offer 4% or 4.5% or whatever interest rate?
Absolutely. It's a different product. It's not a bank. There's no SDIC protection.
It's not a CD.
There's no bank regulation. This is an asset management solution. And that comes with all sorts of risks that an asset management solution has.
Right.
And those are investing in underlying bonds. We're not investing in crypto or anything crazy. No. This is investment grade, proper, fundamental, underlying stuff in small amounts. Nobody's going to put all their money into a chocolate account, and I wouldn't recommend you to.
Right.
But it's some of your money to look for that slightly bit of enhancement with advice from a financial advisor if you need it, is a great proposition.
It's interesting to me, right? Because there's a lot of talk about yield enhancement, particularly over the previous 5 years and almost 10 years, right? Where interest rates were fundamentally at zero globally. But all this talk about enhancement created a whole much more risk as well. And what you're saying is in this situation, that's not actually the case. And that's kind of cool for me. I want to ask you this too. How would you categorize where we are in the sort of development of embedded finance as a thing? Is it early? Is it medium? Is it late stage? Where do you think we are?
I think it's medium stage. I think the technologies have afforded us the ability to plug anything into anything, right? So,
yeah, it's kind of cool.
And that's gotten better and better as time gone by. And it's not just the taking a platform and a service and putting them together.
Right.
It's actually sometimes putting an intermediary in between the platform and the service so that you can have multiple platforms and multiple services all integrated via one core embedding activity. So that's going to continue to evolve. You see where some of the valuations on startups is going, it's actually in that middle integration space.
Yeah. We spent a lot of time over the years actually talking about money, finance, insurance and stuff like that. What is it about this that makes you so passionate about it? Because I can feel it in the way you talk about it.
Man, I've got some cash and I'm pissed off that I don't get any decent returns on it, right? So enough. If I can solve a problem for myself, I'm sure there's lots of other people that have the same need. And all I'm trying to do is make money, work harder.
Yeah, I want to ask you this too. What excites you about building things from scratch?
Oh, I love it. The problem-solving aspect, building houses out of Lego bricks, the making something out of nothing. That is probably the most satisfying job anybody can do. And the problem-solving aspect and solving for these solutions, it's like a drug, right? You kind of chase this idea of how can I make this better, smarter, faster, more accessible. Do you feel like, and this is a hard concept for me to explain, but do you feel like sometimes you can see a future that you want and you're trying to build into that future? Do you know what I mean? Yeah.
So you can see it. So you know kind of, I want to get on this road and maybe it's a winding road, but I know kind of where I'm going. Where the target doesn't change much, but maybe the path changes.
That's absolutely right. And that's the story for every successful startup. You know where you're going, but what happens is you don't know all the rocks in the road on the way to get there. And the trick is how do you navigate all that stuff to arbitrage or circumvent or redesign to get to that end goal.
And just refresh my memory, did you have a long corporate career before you started building stuff on your own?
I did. I was an actuary by training. I was with Swiss Re. I ran HSBC's insurance businesses for a number of years. I was the CEO here in Singapore. I was on the board of their asset management businesses. I was on the exco of the bank doing all that corporate-y stuff. But while I like all that and I was quite good at it, nothing beats the rush in building something that you can really own yourself. Right. I mean, I wanted to make this point that conceiving something that nobody else has conceived yet and actually bring it to fruition is really exhilarating. Yeah, absolutely. Yeah. And that's why I love doing it as well. Walter, I really want to thank you for sitting down and doing this. I really appreciate this. We've got to get you back on the show again. No problem.
Awesome.
Always good to chat, Mike. Good to see you.
Thank you so much.
See ya. Cheers.
Don't forget to follow Insurance for the New Possible on your favorite podcast platform and on YouTube to stay up to date on all of our amazing and informative content.